Let's also welcome Deven Choksey on board. He's the managing director of DR Choksey FinServe. And hi, Deven. Thank you so much for joining. And first up, help us with your take on Asian Paints. The numbers look quite okay, but the management commentary is not that exciting as of now. But given the valuation picture, do you like the stock at this point in time?
Yeah, good afternoon.
Good afternoon.
Well, to begin with, I think the downside in the performance is definitely protected by the company. In fact, as against, I think the flattish kind of a growth, there is a marginal improvement in the growth. So that's the first positive thing because up till now, all these quarters, I think we have seen the fall. I think from the fall, it has come to a stability level in the performance, which is fundamentally good. Second most important point to observe, the margins are protected as against, I think, the fall. The margins are protected. So that is again a good sign. Now, the third question will obviously come up, and that is where management commentary is playing a role, is about the growth. I think the growth is not appearing to be as smart as one thought about because I think of variety of reasons. In my viewpoint, I think minus the whole year where probably we have struggled in most of the project execution as a country as a whole. Probably, I think even segment like housing also has struggled. Should this recovery take place in the current year as expected, then probably from this time onwards, I think you should be seeing a better time going forward. Maybe the validation of this particular viewpoint could happen in every successive quarter when we interact with the management. But as of now, it is a happy situation that the downside in the performance is now protected. Maybe I think buying time is still not right because again I think one FY27 perspective, if you look at the company, it's still not I think trading cheap. It is expensive in a way, but the fact is that I think the business condition, if it improves, then there will be a scope for re-looking at this company.
Right. Kunal, hi, afternoon. Welcome to the show. Tell me, what are the charts for Asian Paints looking like?
I sense that the stock is bottoming out. I strongly believe that the worst for the stock seems to be behind. We've seen a very strong surge on the indicators for Asian Paints in the last 4-5 days. So it's not just the price action, because when you look at the price has come back to the the December highs for Asian Paints when it came closer to that 2400 mark. But the indicators have come back into almost like a 4 to 5 month swing high, especially the daily RSI. That generally indicates that the stock is forming a stronger bottom or a base at the current levels. So maybe some bit of volatility on the back of results, but then if in case the stock dips down back towards say 2200 2250 mark, that could be a very good risk reward territory to go for a contra buy, because generally we've seen that whenever indicators start to lead the price action, that generally is a strong indication the prices bottom out very quickly, and you expect a V-shaped recovery or a very swift rally into the stock.
All right, so signs of bottoming out when it comes to Asian Paints. So that was the analysis on the numbers, as well as we also got the chart check from Kunal. But back to the markets, for Nifty 50 right now, we are holding on to the gains of over 300 points, while for Nifty Bank, almost 750 points of jump is what we are witnessing. And a lot of these financials are taking it from the front. Stock case in point being IndusInd Bank, that is holding strong with a gain of 3%. Even HDFC Bank is also supporting, and Axis Bank too is one of the top gainers in Nifty 50 right now. But Kunal, any of these three large cap banking stocks, any stock that you like at this point in time? Because of late, what every day we are witnessing is that some or the other large cap is coming in front. Yesterday it was Bajaj Twins. Today it's Reliance as well as HDFC Bank supporting the markets. So what's your take?
Yeah, I think it's a classical sector rotation, or within sector is also large cap rotation which is playing out, and that generally is very healthy sign, at least in the initial part of the market rally. Because look at it this way, the last 3-4 months had been torrid for the markets. So I think in that sense, the initial phase of construction or a reconstruction of a trend generally begins with large cap stocks, and if you see a very strong bout of outperformance on a select large cap names, then the markets get a lot more frothy in those large cap stocks. But that's not the case this time around. You're seeing large cap stocks rotate quite happily. Yesterday it was, for example, few select auto names which were doing pretty well. Bajaj Finance, which was doing pretty well yesterday. Today you have a completely new set of stocks, and the ones which were doing extremely well yesterday, they've taken a pause for themselves, or at least a very mild kind of an upside for these stocks. So that indicates that the market breadth is widening, at least on the larger cap front, and with support from large cap stocks on every leg of the market up move, that indicates that the markets would probably move on to the supports on the higher side. We were discussing in the morning that after that 100-point gap up, my expectation was at least another 400 points on the upside. We've gotten an additional 200 points on the Nifty so far. My expectation is that at least another 200 points to 50 points could be in the offing over the very, very short term.
The one casualty today is Trent. That stock is down about almost 7%. Now, the big fear in the market is the re-entry of Reliance Retail with Shein, which is a banned Chinese apparel maker. Remember, it was banned about a year and a half, 2 years back. And now with Reliance Retail, that marks a re-entry with its new app on February 1st, which was launched. And that sort of caters into the same category which Trent has an exposure to, that's Zudio. Affordable branded apparel. Deven, how much of a concern could a competition from Reliance Retail turn out for Trent?
Well, that will be a reality, actually speaking, because I think on equal basis, if one looks at it, I think all the components, all the KPIs, as we call it as, I think they would probably fall in place, same as it is for Trent, will be with Reliance Retail. Starting from end-to-end, I think process of manufacturing to marketing, I guess I think it will be on equal footing. So there is going to be a competition, no doubt about it. And I think this format is successful. That is also clear. So I think there is going to be competition. Now, whether I think in this competition you will protect the margin or you will keep on growing, I think the time will tell. In my viewpoint, I think as of now, everything seems to be in price as far as the Trend is concerned. Maybe I think if you go further up from the current levels, that would probably mean some amount of profit booking coming in with stock going forward.
I think on Saturday it did surge post the budget announcement, and it did go back to those 6,200 kind of levels. But Kunal, a further correction on Trent, you think?
Doesn't look like. I believe that again the stock. So what's happening is stocks which were doing pretty well for themselves on the budget day, and the ones which are correcting, which had corrected on the budget day, the markets are going through a phase of a correction of this aberration. The move, for example, many of these the railway stocks, the defense names, they were beaten down on Saturday. These stocks are making a comeback. Then you have the FMCG stocks, the likes of Trent, etc., which are doing pretty well for themselves. Even ITC, those stocks are taking a bit of a backseat today. So I think it's just about a play for the market in terms of the phase what we are going through. My sense is that the volumes which have moved up higher for Trent in this recent leg of uptrend from 5,400 levels to almost 6,100 marks a short-term bottom in place for the stock. So maybe another 100 point, 150 point dip to that 5,500 levels for Trent. That could be a good buying opportunity from a contrarian perspective.
And good move continues on the benchmark indices, because for Nifty 50, we are now seen to be touching that 23,700 mark as well. And on a YTD basis, since the start of this year, Nifty is actually ready and almost there to surpass, or rather make this year neutral for itself in terms of the return after that dip that we have seen in the month of January itself. But a lot of earnings underway. Let's move on and let's put the spotlight on Titan. That could actually see another steady quarterly performance as the studded jewelry business and Carrot Lane are expected to clock robust growth. Snehi tells us what the street is expecting. Snehi.
Well, absolutely. So here's what to watch out for when Titan declares its Q3 numbers. And on a standalone basis, revenue is expected to come in at 16,320 crores, which is an uptick of 26.4% on a year-on-year basis. Brokerages are penciling in an uptick of anywhere between 20 and 26% on the revenue front. So that's going to be an interesting number to watch out for. EBITDA is seen to grow at 13.3% at 1,651 crores. Net profit also, we're expecting a very small uptick of 2% on a standalone basis at 1,060 crores compared to 1,040 crores on a year-on-year basis. Margins, however, are expected to be slightly under pressure at 10.1% compared to 11.3%. Now, a big key expectation here is that a one-time inventory loss of anywhere between 200 and 270 crores is expected on the back of the reduction in custom duty that was announced in the interim budget earlier, but the overhang of that is expected to be present in this quarter as well. Now, as per the company's Q3 update, standalone jewelry sales grew 26%, studded jewelry is expected to grow by 21%, watches by 13%, eyewear anywhere between 17 and 18%. Tanishq on a like-to-like basis is expected to grow by 15% year over year, and CaratLane expected to post a robust set of robust growth rather at roughly 25%. The company is expected to have added 69 stores during the quarter, taking its total store count to 3,240. Some important factors to watch out for when the numbers do come out: commentary on how the festive season has been, how the wedding season has been, demand trends, profitability across segments, and competitive intensity and product mix. So watch out for Titan's numbers. But well, yes, on a standalone basis, revenue expected to go up anywhere between 20 and 26%.
Okay, that's the expectation from Titan right now. What you're seeing in the market is a big reversal of Saturday. So capex is actually making a comeback, and it's consumption which is actually petering down. Look at ABB, look at NCC, BHEL. Now that Trump's tariffs have taken a bit of a pause, you have a Motherson Sumi, Sona BLW. All these stocks actually hold out. And on the flip side, I mean, not just Trent, because that seems like a special situation today, that big threat from Shein, but a UBL, you've got a Bata, which is down, Nestle, Tata Consumer, Aisha, Britannia, Hero MotoCorp, M&M, all of these names are seeing a bit of a slump in today's trading session. Deven, how is it that you're maneuvering between this sort of jugglery which is transpiring since the budget on capex and consumer and the switch out and in of both?
So except for the momentum play, I think most of the fundamentals are as it is. So I think there is no need to juggle the portfolio so much because of the budgetary announcements. Do agree that I think there is going to be a thrust towards consumption, largely because of the fact I think that a lot of money has been left in the hands of people for spending. But at the same time, I think this is also going to get reflected over a period of time and not immediately. So if the consumption is a reality, then probably I think one can buy the stock when the market gives an opportunity at lower levels. Just because of the momentum is better, and I think the consumption-oriented stocks has gained the valuation again. I don't think that immediately it is a good idea to buy them. Uh, this year, 2025, is also going to be the year in which we are likely to see a lot of opportunities coming our way as investors on the valuation side, because some of the weak hands are shifting out of those counters in which I think they had entered into with the momentum trading purpose. And that's going to be, I think, a good advantage. Whenever some major attack takes place on the stock price front because of the weak hands are going out and the quality of fundamentals are strong, probably it would be a good buy opportunity, be it consumption or be it other infrastructure companies.
All right, so that's the take on all these capex related counters. But the other stock in focus is Godrej Properties. Just a while back, we also had the numbers. The numbers look quite okay, but the company is also saying that they are on track to surpass their FY25 booking guidance. And what we see is the stock is holding on to the gains of almost 3% right now. Kunal, a chart check by you. How do you see Godrej Properties?
So my sense is that the real estate stocks may not make a very strong comeback on a sustainable basis. What you're seeing right now is the first leg of a short covering move, and the reason for that is look at the last 4 or 5 days of volumes for Godrej Properties. The volumes were just about half of the volume the stock had seen on the cash days. When the stock was falling or had fallen aggressively from 2400 levels to 2100, 2150 mark for Godrej Properties. Today is the first day where you're seeing the volumes move up higher. But if we lack consistency of volumes into these stocks, then eventually these stocks may just about get the rally may fizzle out, and these stocks may either get into a correction mode yet again, or they may go into a time-wise consolidation. So I would not be too much gung-ho about these real estate names as of now, unless there is a strong evidence over the next maybe few days that volumes have started to make a comeback and these stocks are trying to protect their previous day swing lows. If we see that pattern consistently for the next 2 or 3 days, only then I would believe that we could probably expect a much more stronger trend.
All right, that's the take on Godrej Properties. Not a buy right now, but yes, the volumes are seeing a bit of an uptick. But Deven, help us with your take on some of these defense-related counters as well, because as we know that there has been a bit of a disappointment, or rather, the kind of capex announcement was not as per expectation, and given the kind of run-up that we have seen in all these counters for the past couple of years, there was indeed a valuation correction is what we have witnessed. But for today, a good bounce back, what we see in stocks like BEL, HAL. So given the valuation comfort, will you be a buyer at this price point, or will you still want to stay away from these names?
So I think many of the companies have corrected on the price. And I think given the fact that in last 3 quarters, the government has been little bit slow spender. I think in spite of their budgetary allocations, they haven't been releasing the orders. They have not been picking up the material also from factories. And as a result of which, I think the books of the companies who are suppliers in the defense side of the defense items, they are the ones I think who have been reporting little bit muted results. Whereas the situation is turning, and from December month onwards, the government has started spending the money and actually started placing the order and buying the material whichever has been contracted for. So, in my viewpoint, fourth quarter will be distinctly different compared to what we have seen in the last 3 quarters of this financial year. So, given that kind of a situation, some of the companies definitely for sure, where the price correction is sharp, they may see the stability slow bounce back going forward into the stock prices. Some case, I think the valuations are still expensive. It's not so cheap. So one will have to wait and see whether the downfall in the performance of the company is arrested. Should that be the reality, then maybe in the next step we will find the buying emerging in some of these stocks. Fundamentals have not changed. I believe that I think even in the current budget of FY26, the allocation of money towards defense has probably gone up a little bit, even if it is not significant. But I believe that I think the business fundamentals remains absolutely intact as far as the sector is concerned.
Okay, that's that on BEL. In fact, let's take a look at some of these capex plays. ABB holding up 7%. You've got NCC higher by 6.25%. BHEL is looking very strong. And some of those defense plays as well, the likes of HAL, etc., looking very, very good. Kunal, any of these names you think are trade worthy right now?
Yeah, I think HAL, BEL, BHEL, I think all three of them are very strong in terms of the chart patterns. I was discussing in the morning on the chart busters that HAL has formed a classic triple RSI divergence where the stock in the last 2-3 weeks or so has formed three price lows on a consecutive basis, and on all three occasions the RSI had actually made a higher low. That's a classical setup of a RSI divergence, and eventually when the prices correct this kind of a divergence, we see a very strong V-shaped recovery or a rally into these names. My sense is that HAL should come back to that 4400 to 4200 to 4400 kind of a zone, so which means potentially another 300 to 400 points at least on the upside is what I would expect for HAL. And same is the case with the other name, BEL. For example, I think that stock in the last 2 days prior had seen a very sharp correction, almost a 10% kind of a correction from 300 to 265, 270 thereabouts, which means that in this leg of price uptrend, we can expect the stock to come back to the 300 levels. BHEL could be a very interesting case. The stock yesterday formed a classic bullish hammer formation. There was a gap which was created into the stock yesterday, and today the stock has not just filled the gap, but it's also gone through a contradictory move with respect to the hammer formation. So that indicates that we could be looking at a major bottom for BHEL. The risk reward favorable for all three names, and that's why they look attractive.
All right, so that's the take on all of these names, but HAL was also a chart buster idea by Kunal in this particular morning, and in intraday basis we have seen good moves coming in, but along with that BEL as well as BHEL is something that he likes at this point in time. But that's the take on all these defense related counters. But with this, Deven would like to thank you for taking the time out and speaking with us this afternoon. But getting back to the market, since we are almost at the day's highest point right now, and at the bottom you can see that it's big boy Reliance that is also supporting throughout. It's been a 3% jump is what we are seeing on Reliance Industries. But for this, let's move on and let's also take the closing trade picks from both of our experts. And Kunal, tell us which stock are you looking at this point in time?
So it's from the defense name. HL is something which is looking attractive. So I think even at current levels of 3,700 thereabouts for HL, I think the risk reward is extremely attractive. The stock today I think has also moved on the back of much higher volumes than what it had shown in the last 3-4 days of the price correction. So that is also another reason to substantiate the kind of up move the stock has shown today, and that could be sustainable over the next couple of days.
Okay, that's quite a conviction on HAL right now. Continues to be a buy. We're going to take a very quick break. Come right back. We'll continue tracking markets on the other side.